Hey there, and welcome to the Simple Finance channel. Today, I'd like to take a little bit of time and talk about the current market. I know everyone's been freaking out about the market lately. It's been crashing a lot. People are running for the hills. So I just wanted to take a few minutes today and talk about my thoughts on it and what I'm doing differently based on the current market. So here we can see my taxable account. So for the 1 quarter, I'm currently down almost $21,000, and over 15,000 of that is just in the last month, and this is just my taxable account. So my Roth IRA, let's see here, for the last 1 month is down $16,000, and for the quarter is down almost $19,000. So that's a lot of money. I mean, that's in the past quarter down close to $40,000. I mean, that's very real money. I could go buy a new car. I could be doing all sorts of things with that money. So for a lot of people, this feels really, really bad, obviously, because, it never feels good to watch your money go down. So my general thoughts on this are that this is actually probably a really good time for a lot of younger investors like myself. I'm personally in my early 30s, and I think that right now is going to be a really good time to be buying in the long run. So let me explain that a little further. So here we're looking at the PE ratio of the S&P 500. So this is taking the average for the whole S&P 500 market weighted and comparing the average price of those companies to their average earnings. So in general, if you're buying companies that have a low PE ratio, those are going to be more your value companies. These are, kind of your old timer companies that maybe don't have huge growth earnings expected, like Coca-Cola, something like that. Whereas your high PE ratio companies are, your flashy, hot tech companies, Tesla, stuff like that. In general, you want to be buying companies that are when their PE ratio is lower, because if a PE ratio is very high, this means that these companies have extremely high future earnings priced into their stock price. So if anything goes wrong with that stock or that company, the price is going to come down. In general, there's been a lot of research, such as the data from Fama and French. If you want additional reading, I would definitely recommend you read that. That shows that companies with a lower PE ratio on average return better returns. So as you can see here, PE ratios have essentially been going up and up and up since 1980. So a lot of this is due to interest rates going lower and lower and lower over time, which leads to, if you do any sort of discounted cash flow models to price companies, long story short, the lower the interest rate, the higher the price for companies, because your risk-free rate is then very low. Anyways, with that said, as you can see, the PE ratio up before this crash was extremely high. It had only been this high 2 other times, in the early 2000s and just before 2010. So the only 2 times it's ever been this high is the dot-com bubble and the 2008 financial crisis. And those were both considered extremely big bubbles. So as you can see, prices were extremely expensive. So the best way I like to think about this is, if you're going to the grocery store and you're going to buy something, would you rather pay 30% more or 30% less for this? Because you're still getting the exact same thing, you're just getting it much cheaper. So for people who have a very long time horizon, such as people in their 20s, 30s, even 40s, this is probably going to be a really good thing for you long term, because as long as you're still buying and you don't panic sell during this event, you're going to be picking up those companies way cheaper. So for example, a lot of great companies are on sale right now, essentially, is the best way to think about it. So as long as you're sticking with your plan that you developed, and for example, let's say you're doing, $500 every couple weeks, and that's your plan, you're going to be getting more and more shares as the market continues to drop. And then when prices eventually begin to recover, because they're going to eventually recover, your market, those shares you bought are going to just be worth that much more because you're buying them at a lower price. So in general, I would say this is going to be a really good thing for a lot of younger investors. I think something that's really hurt younger investors is that prices have just been so high for so long. There hasn't really been a great time to buy anything. And this isn't just stocks, this is bonds and real estate too. I mean, bonds are yielding like less than 1% for a lot of them. They're not even keeping up with inflation for the past decade. Real estate is really expensive. It's very hard to buy any sort of a rental property that cash flows unless you're getting an absolute dump. So really the only place that a lot of people have been looking is the stock market, and prices were still extremely high there. So in general, my thoughts are this is a really, really good time to be buying. And my plan is exactly what it was before. I'm going to keep buying the same exact amounts that I was before. I would recommend to anyone just having your investments completely automated. So mine, it withdraws every time I get paid. It does the same amount no matter if the market's up, down, or sideways. And just sticking to your plan. This is not a good time to panic. And I know a lot of people are panicking right now. So I thought it might be interesting just to kind of look at some of the different people and how much this is really affecting people. So, I mean, if you're on any sort of financial subreddit or forum or anything like that, I'm sure you've noticed that half the comments or posts now are about the crashing stock market. So tips that I would have for how to stay the course. The market's so bad, this person's seen their net worth decrease every single day. Well, first thing I would say is don't check it every single day. I mean, there's no reason. Are you retired today? Do you need this money today? There's no benefit to checking your portfolio every single day. So that value that your portfolio gives you, this is how much someone else would pay for your portfolio. It's really meaningless unless you're planning to sell it today. I mean, do you check the value of your car every single day? Do you check the value of your jewelry every single day? What about the value of your house every single day? I mean, it just really doesn't make sense. I know a lot of people do this every single day. I've been guilty of it myself. But if this is something that causes you emotional distress, where you're thinking about selling out of everything, which anyone is going to tell you is a very bad decision long term, I would just, first thing I would recommend is don't check the market every day. I mean, there's no benefit to checking the market. You should come up with a plan, preferably written financial plan that says this is what I'm going to do, and you need to stick with that plan no matter what. So for me personally, as I said earlier, my financial plan is I max my Roth IRA every January through the backdoor Roth IRA. Please see my other video on that if you would like details on how to do that through either M1 Finance or E-Trade. The other thing I do is I set up my 401k so that comes out every single paycheck to where my 401k is maxed by the end of the year. And then with any leftover money, it goes into my taxable account. So also, if you're wondering about the order of where you should be putting your money, again, another plug, I have a video called the bucket system, and I would highly recommend you check that out if you're wondering, hey, I only have $10,000 to invest, where should that money go? That video will cover all of that. If you're more of a reader, I would recommend the personal finance subreddit. They have a flow sheet that covers all of that as well. So in general, my tips would be don't check the market. It really doesn't matter if it's going up or down. Come up with a plan and then stick with the plan. So I hope this was helpful. If you guys have any questions, please mention them down below. Or if you have any other tips for people who are struggling to stay course right now, also please post those down below. And I hope you guys have a great day. Thank you so much for watching. If you enjoyed this video, please consider liking and subscribing. It makes a huge difference. Also, just the disclaimer, this video is for entertainment purposes only and should not be considered personalized, legal, or financial advice. Until next time, thanks.